Now let's talk about the business income, the fourth income concept. This concept was developed by Edward and Phillips. What exactly is this particular business income? Let me first tell you what is this particular formula given here. Business income is nothing else but the current operating profit, the realized and the accrued holding gain of the period, and unrealized holding gain and loss accrued in the particular period. What do I mean by that? That is, let me imagine that I have certain inventory. The inventory cost is, imagine, 50 rupees. This 50 rupees which is there, right? It can be replaced at 80 rupees, right? Now, when I'm talking about 50 rupees at the end of the year, I'm able to sell it at 80 rupees. The 30 rupees is called as the holding gain. I have held it for a period, and because I have held it, I got 30 rupees profit. That is called as holding gain. Now, if the inventory is being sold at 90 rupees, the difference between 80 and 90 is called realized holding gain. What is unrealized holding gain? Now, first of all, till here what happens? The difference between 90 rupees and 50 rupees is nothing else but your current operating profit. 90 minus 50 is what? 40. 40 means 10 rupees is your the amount which you have due to the accrued holding gains which are there. 30 is the total amount of holding gains, right? Now, when you're talking about unrealized holding gains, what is unrealized holding gain? Unrealized holding gain means you are talking about the paper profit or the paper loss. Paper profit or paper loss means, suppose I can sell this particular inventory at 90 rupees. This is what I can sell. Then that 90 rupees or 100 rupees which I can sell is only at paper value. It is not the value which you have realized. So suppose I say I can sell it at 100, okay? And on the day of sales, suppose I sold it at 90. Now what happens? 40 will be your gain. How? At 90 you sold. 50 is the cost of the asset. 90 minus 50, 40 is your holding gain. And it is realized also. But 10 is your unrealized loss. You didn't realize it. Okay? But you thought you could sell it at 100 and you couldn't sell it. So 10 rupees is your loss. Now, business income says this whole thing. Operating profit is all the three put together. Current operating profit, realized and accrued gain, unrealized gain which is there. All the three which are there put together is basically called as your business income. So current profit is how much? That 30 rupees. How 30 rupees? It means in this case 80 is the ending value of the inventory. 50 is the opening value of inventory. So 30 is the amount, the current operating profit, right? Then if suppose it happens that you are selling at that 80 value goods, you're selling at 90, then 10 rupees is your holding gain, 30 rupees is your current operating profit. Suppose you thought you could sell it at 100, but you are selling only at 90. 10 rupees will be your unrealized loss. Okay, so it talks in business what all I have expected, that also is taken as business income. Keep in mind, business income is not taken into financial accounting because it talks about holding gains, unrealized and realized gains which are there. What are the merits and demerits? When you're talking about a business income, all type of gains which are there are taken into consideration. Users will be aware of the total income which is there for a particular business, for a particular inventory holded or so. This concept, but what is the demerit? This concept makes any allowance for changes in the general price level. So due to inflation, whenever there is a change, you are trying to put it as either as unrealized or realized. Till when will you call it as realized? Suppose you sell it and you actually get the money. Till when will you call it as unrealized? Till the time you sell it, whatever paper values are there, that is called as unrealized. Everything is taken into consideration. You know what happens? How inflation is changing, that way your accounting values also will keep changing, which is not a good thing for your accounts. It involves cumbersome process which is there to find out what is the holding gain, what is the operating gain. This calculation becomes a little cumbersome. Now going to the next income which we have. The next income which we have is operating income. What exactly is operating income? Operating income measures the operating efficiency of a business enterprise. It is concerned with efficient utilization of resources of business enterprise in the of a business enterprise in whatever the main activities are. Operations normally comprise the provision of goods and service that make up the main business of enterprise and other activities that have been undertaken jointly with the provision of goods. Such goods are produced and distributed at price that are sufficient to enable a firm to pay for its services it uses and provides a satisfactory return to its owners. Example: the manufacturing of soap, household goods, and their distribution. Operating items are generally of recurring nature, such as the cost of raw materials, salary, wages. However, that may not always be true. Sometimes there are certain special items which may be incurred which are non recurring in nature but included in operating items. Examples of which are overtime wages, cost of special material which is being purchased for a specific order. Thus, whether an item includes under operating or non-operating depends upon the nature of that particular expenditure which is there. So how do you calculate whatever is the income, whatever is the revenue of an organization? From that, you are trying to reduce the operating item expenses which are there. Whatever is the balance, you are calling that as operating income. While reducing the operating expenses, you have to keep in mind whether it is the principal revenue producing activities expenditure or not. If they are principal revenue producing activities expenditure, yes, you have to deduct it. The remaining amount which is there will be called as your operating income. Right. Next, here. The scope includes firstly the event and transactions relating to the current period. It does not include the events that had taken place or will be taking place in the future periods. However, there are some transactions which take place in earlier years, such as purchase of fixed assets, but are used in the current year, right? Now, these normally they are purchased on a particular date, but they are used over many period. In such situation, the proportionate cost, that is the depreciation, becomes the current year's cost. The decision of the current period involves the proper use and combination of these resources. So here when you're talking about operating income, you're talking about, even those which are not being incurred in a particular year, but the fixed assets which are being purchased previously, but the usage is continued currently, then that also has to be taken into consideration to find out the operating income. Secondly, the current income recognizes normal changes in operations such as sales, cost of sale, does not recognize non-operating incomes. So here when you're talking about, the non-operating incomes which are there, that means all your investing incomes, finance incomes which are there, they are not taken into consideration. You only take income which is there, which is related to your operating activity. So if at all you remember your cash flow statement, under that the operating activities, only the income which is related to operating activity is basically taken as your operating income. What is the merit with it? Benefit. Current operating income concept is useful in judging the profitability of business enterprise. So exactly in the business how much money you got, that can be known with operating income. It facilitates many predictions. So it will tell, in your business activity, future predictions which are there can be made, because it will exactly talk about business activities only. It is useful in all proposition of business enterprise in understanding the past behavior of profits and coming to tangible conclusions. So here what you're doing, you are taking all those which are related to your business transactions which are there, and then making certain analysis for the future. This concept facilitates inter-period and inter-firm comparison. So for two periods which are there, for two firms which are there, operating income calculation becomes easy. But what is the limitation? External users are concerned with total income of the period, irrespective of the nature, to know the performance of the business enterprise. See, when I am talking about, a bank is not interested only in your operating income. Possibly it's interested in what are the other ways you would earn the incomes which are there. So this is one problem which is there with your operating income. And when you're talking about practicality, remember that not only the bankers who are there, finance income, how well you manage your finances, also equally important, or how well you actually make the right investing activity is also very important. So these activities which are there and their incomes are not taken into consideration, so you are narrowing down the total efficiency which is there of a particular organization. That is with regards to your operating income. Let us go to the last income which is there, that is the comprehensive income. What exactly is comprehensive income? Comprehensive income is a truly comprehensive concept of income for a period must include all the changes in owner's equity from non-owner resources that are associated with the period, and that can be measured reliably regardless of the restriction or recognition imposed by our present gap. So what does it say? Every revenue which is being earned, all are supposed to be taken into account. What is that? It includes all revenues from normal operations and expenses incurred for earning such revenues. So it is going to include every revenue which is there. And second, it also takes into account non-operating items such as incidental gains and losses. So if there are any other non-operating incomes, that is also taken into consideration. It includes holding gains and losses. Now we have seen you're holding for the assets are holded for a time period, and because you're holding, you're getting some profits. That is also taken into consideration, right? Then it also includes what the entity has received or expect to receive for its output, or what it sacrifices which is there in a particular period of time. So all expected profits are also included. So what all is included here? Normal business activity revenue, gain from unusual sources, other changes which are there, non-owner changes in equity, extraordinary items, items relating to recovery of taxes, unrealized incomes, all are taken. Then losses, extraordinary losses, not only revenue losses but other losses, cumulative effect on prior period changes are also taken into account. Unrealized losses are taken into account. Comprehensive, matlab everything is taken into account. So whatever we have learned in the previous income concepts, everything is taken into account. Then you call it as comprehensive income. So when you're talking about comprehensive income, what are the merits? All actual reported net incomes, when added together for the life of the enterprise, it equals the total net income of the enterprise. Thus it enables reconciliation of the total income of the enterprise over its life. So I am talking about the efficiency which is there from all the point of view. How well I am holding the products, when am I selling it, what is the right time I'm selling, am I gaining good profits due to selling at the right time. So the holding gains are taken, expected gains are taken, right? All are taken into consideration. So this gives a very good picture of your complete efficiency of a enterprise. It avoids possible manipulations, as total income should recognize as stated above. So no manipulations, everything, all facts are known here. understanding and preparation of income under the concept is easy because you don't have confusions. All incomes you're earning, everything you're taking into consideration, right? And as a distinction between operating, non-operating, holding, unrealized, realized, these differences are not there. It becomes very easy to calculate every amount which you are earning. What is the demerit? The concept necessitates to analyze information. When you're talking about making certain decisions which are there, right? Here, you have to discriminate which is a normal loss, which is an abnormal loss, which is going to actually technically, be included in your analysis. All these are very important. For managerial decision, this is not really useful. Users may not be in a position to discriminate between normal loss, abnormal loss, realized, unrealized gains which are there. These things become very, very difficult.